Hey you guys, welcome to the trade management portion of this course. This topic, you guys, is a paramount topic for your trading. Okay, this can make or break a trader, in my opinion. Alongside of trade management, we're also going to just add to that expectations. Okay, there's a lot of people that and you might be one of those people who have signed up for this course as a smart money trader, and you think that every trade needs to go to 1 to 10, 1 to 20, because that's the expectation that YouTube or Smart Money Concepts has put on you. See all these gurus, quote unquote, that are saying, "Oh man, if you just follow my system, you're going to get 1 to 20s all the time," and that's, in my opinion, not the case. Can you get those trades? Absolutely, you can. 100% you can. But that does not mean that you're going to get those every single day of the week. And this is why I personally manage my trades, I think, a little differently than some people in the terms of my expectation. And I follow supply and demand structure. Instead of hoping for a trade, I will trade based on the way I see structure forming and the supply and demand forming prior to me entering the market, so that if I get into a trade, I can manage my risk and I can make sure that I'm making money every day. So instead of us looking for 10 to 20 RR per trade, I'm going to suggest that we think a little bit differently and we manage our trades based on structure. Okay? So for instance, in this market structure, you guys, what we're going to be doing here is the blue is your 15 minute. Okay? So if we have a 15-minute POI that has created an order flow change, okay, if we've created some sort of order flow change here, and we're looking for price to come back up into it, and we want to get into a sell inside of this supply zone, okay, then we're going to be thinking about, sorry about that, we're going to be thinking about how do we manage our trade and how do we get into the lower time frames to get into a trade down to the previous area that sponsored price higher. Now, your overall target could potentially be this demand zone. But when we think about structure, this area of price, for instance, if the market could have potentially looked something like this, and there could be a sell to buy candle here that took out this previous area of price. And when price comes down to mitigate taking out this structure, this OFC does not have to mean that price is magically just going to melt for you. Okay? Can it? Absolutely it can. But we aren't trading on hopes and prayers, guys, in this group. We're trading on probability so that we can be profitable long term. So how I personally manage my trades, you guys, that if this area is demand and this demand caused price to push up to here, this could easily distribute, creating a new high, which this was just internal liquidity. Okay? Therefore, if we start to see our patterns take place, I will look to take a short position and I will look to then do a few different things. And you guys will have to test this out. You guys will have to back test this. You guys will have to implement this in your forward testing to figure out what one works the best for you. But in terms of how I trade, I will do a couple things. If price mitigates this POI and then falls, I will move my stop loss to break even based on the structure that was mitigated. So if price comes back here and falls, now my trade can go break even, because if price is going to reverse from here, there's no reason that it should ever break this high. Unless, for instance, your stop loss was above this high and this happens to be internal liquidity that could do that. Okay? But in terms of price action, I can now go break even, because if price from a probability perspective does something like this, it's probably going to wipe me out and do that. Okay? So this is one way that we can manage our trades. And now as price starts to distribute lower into these areas of demand, you can go either break even here, or for me, depending on what this trade is, right now this trade for me with a 1% trade would be around almost 4%. Therefore, if I'm targeting 10R a day, if I'm targeting around 1 to 5, then I will look to take 2 to 2.5% off this trade, so around half, and then let the trade run to maybe 1 to 5, 1 to 6, 1 to 7, 1 to 8. Therefore, I've now moved my stop loss to break even. I have secured some profits, and if price goes like this, I can make 5%, and if price goes like this, I have secured 2.5%. Regardless of that, that means that my P&L will start to do things like this. It won't ever do things like this, because we're always profiting a little bit from the trades that do indeed go our direction. And the only times that we're losing money is if the trade decides to do something like this and just take us out. And if you use the confirmations that I teach in this group, the amount of trades that go like this and then instantly take you out should be lower than the trades that go like this and then take you out, giving you enough room to at least partial your trades. Okay? So regardless of how we're looking at price, we should be trading based on structure and partialing out at previous areas of demand or supply that push price higher, push price lower, so that we can actually secure the profits, because anything below this low, we don't really truly know if it's going to go there or not. You can look at trendline liquidity, you can look at all those things, and if at some point in time in your trading journey you say to yourself, well, I've seen this set up so many times that this trade for sure should mitigate all of this, therefore there's times, guys, where I won't even take a partial until 1 to 6 or 1 to 7 or 1 to 8, because that setup doesn't make sense that price would reverse from here. All of this liquidity might already be mitigated, and therefore price should just melt through it, and then the area that's unmitigated, I'll take a partial. Okay? So in terms of our expectations for our trades, I personally believe that you should be sticking to partialing at structure, partialing half of it or a quarter of it or a little bit at the next structural demand or supply of the time frame POI you're trading. So 15-minute demand, 15-minute supply. It could even be a 5-minute. This could be a 5-minute order block that really rallied and price never mitigated it. Therefore, price could do that. And we always want to be protecting our accounts. We don't want to be fearful, but we want to be protecting our accounts, because over time, the trades that do indeed go for us, okay, that go for us, will actually give us that percentage extra. So for instance, if this trade goes 2.5%, this one's a loss, a direct loss, then you're only down 1%, and then this trade goes 2.5%, and then you have a direct maybe 2 losses. So now you're back to still in profit because you started at 0, and then all of a sudden this trade, you partial out at 2%, but then it ends up running all the way to 1 to 10, well then you get another 4%. And then the next trade that you take is a direct loss, boom. The next trade you take is a 2% partial, and then it doesn't go to target. But you can see how your equity curve will start to do more of this versus this, right? Because we're not taking so many direct losses over the course of everyday sessions. And some trades, you guys, I have days where I take a BE, I take a BE, I take a BE, and then boom, I get a winner. That's okay. Those will be days that might be a little more frustrating for you. But taking a break even versus 4 or 3 losses is a little easier to stomach from a psychology perspective and for your P&L equity curve. So let's look at some chart examples of some trades and how we can do this sort of concept. So let's say, for instance, you guys were looking to take a short. The market's going down. It's now coming up to a POI, and you believe you can get a short off this buy to sell. So we're going to go into the 1 minute time frame, and we're going to look for our chalk and our flips, and we're going to look for our flip zone and supply and demand failures. So in this price action, you guys, we have demand here. This area of price, push price higher. We believe we might be able to get into a trade with this liquidity, this fair value gap, and the fact that we're in supply. We might be able to get a trade down to here, and we'd really love the trade to take out all of this liquidity. So what can we start to look for? We can start to look for our breakdown of supply and demand. So let's go to the next candle. Price taps into demand. It's coming back up into the wick that took price lower. So there's supply here. Price comes back in, starts to fall. This area now is an area that you could probably short from. So we could look to short with our stop loss above this high, and we could look to then take our trade all the way down here. But what do we start to notice? We notice that this area of price drove price higher. We know that this is internal liquidity. So we don't, and this is unmitigated. We don't know that price will go all the way down here. We are hoping that this trade, because we had a demand failure, a supply hold, that will actually get into a nice sell. So we get into our trade. Price is going in our direction. And what can we do? This area of price sponsored price lower. It has not mitigated that price. So for me, it is a little more risky to put my stop loss to break even, because price could do this. This is where you guys will have to decide for yourself how you want to manage based on your own psychology and your own knowledge and expertise as you start having more and more trade executions in your journey. So price starts to mitigate lower. So from my perspective now, you guys, price has cleared out this low, created a drop-based drop. I would probably be okay to move my stop loss to break even. And this trade at this current moment in time, you guys, if it was a 1% trade, isn't quite in profit 2%. So I would not be partialing, because if you partial out here, the equity of your trade, if you go down here and get a 1 to 6, you're only actually getting a 1 to 2.5 based on the fact that you partialed too early. Okay? So I would be break even. And now as price starts to distribute, we got taken out of that trade. Now in situations like this could just be mitigating that POI that I talked to you guys about earlier. It might actually keep going lower. We don't know. This is what you guys can start to test for yourself. So price filled the fair value gap. This is an order block on the higher time frame. So all of this internal liquidity was simply just a liquidity pool. So we're break even on this trade. No big deal. We didn't lose any money other than maybe commissions. Or if you put your stop loss just inside of profit to cover commissions, then you didn't lose any money. And if we look at how the trade plays out, that we start to see and notice that demand that's pushing price higher is holding and holding and holding. Therefore, the market from this moment didn't really want to go lower than our immediate unmitigated demand. So you just saved yourself a trade and a loss by waiting and making sure that price does want to start falling block flow. Okay? And I want to be clear. That's not to say that sometimes you won't go break even and the trade will go in your direction. That can absolutely happen. But I would rather personally be safe than sorry over and over and over again. So in this instance here, if we go back to the 15-minute, we'll start to notice that price did give you a little trade, but then it decides to just take off. So this was the block flow. This was an order flow change. And like I talked to you guys about, if you have an order flow change that taps into another order block, price is more likely to follow block flow than it is melt from these specific areas. So yes, you can try these trades, but once you understand how to manage your trades, you will take less losses and you won't be that concerned about all the break-evens, because the trades that are meant to go in your direction will start to go in your direction, and you won't have to worry about all of this noise here, because the true trades, if you were trading with trend, you would be looking at break of structure, unmitigated POI, take a long, target the highs that are unmitigated, and you can see that if you go break even in the correct direction of the market, that the market is less likely to wipe you out, because it's going to keep holding each demand level as it's mitigating higher. It's the times that price reverses like this on you guys that typically means you're on the wrong side of the market, and then you can start to be aware and say, okay, I broke even, no big deal.